Welcome to Monday's Market Outlook. Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing, and really is a make or break week for the market. We saw the Dow and the S&P both move to the downside about just a little more than 2% last week, in some pretty serious, some volatile trading. We saw, obviously, based on the commodity sell-off in oil and gold last week, the market imploded. We had some terrorist attacks up there in Boston. Very volatile week in the market, but also market trying to decide whether or not the seasonality that we've seen for the past 3 years in a row, these late April, May pullbacks for the past 3 in a row, whether or not that's going to happen this year. What is different this year from the past 3 years? QE infinity. Yeah, we had QE 1, 2, 3, Operation Twist, and now we have the QE that has no name, and a Fed that's really hell-bent on propping this market up no matter what. So even if we do see kind of this spring swoon, or whatever the 500 pounds want to call it, I think it'll be 5 to 10%, and it'll be used as a buying opportunity because you can't fight $85 billion a month of the Fed. So really a make-or-break week for the market. We saw Caterpillar report earnings this morning that weren't that good, and the CEO also warning kind of a global slowdown. So that's a canary in the coal mine. But also take a look at this, folks. Year to date, the sectors showing the most strength: healthcare, consumer staples, and utilities. These are defensive sectors. Offensive sectors, so to speak: financials, industrials, energies, IT, materials, really lagging, right? So another canary in the coal mine that just the market is ripe for a pullback, and this week could be the decision week. Saw weak housing numbers today come out of NAR, National Association of Realtors. Tuesday, not too much on the flight schedule. Some PMI and Richmond Fed, also new home sales. Wednesday, durable goods. Thursday, weekly unemployment claims as usual. And then Friday, advanced GDP. This is going to be interesting, folks, to see where our growth is. Remember last time around, we saw this anemic 0.4% growth. The 500-pound heads are calling for 3.0. So this number will be a market-moving number on Friday. And then obviously University of Michigan consumer sentiment on Friday. So very interesting times we're living in, folks. The S&P is right there near its 50-day moving average, and we, as I briefed in over at Top Gun Options in our weekly options live trade brief this morning, this 1550 line is kind of the Sands of Iwo Jima. If the market breaks through 1550 with any sort of velocity, I'd say look out below, or get on board for the big win and get bearish. So 1550 is going to be that battle line, and I think on the Dow 14,500 is going to be the battle line this week as well. Okay, so I'll be back with tomorrow's sit rep over at Top Gun Options. We'll see how Apple does with earnings and whether or not that's going to be a market mover as well. Got filled on an iron condor in our weekly options model portfolio. That's an earnings trade on Apple that could potentially make $2,000 in about a day and a half. So if you're interested in our weekly options program over at Top Gun Options, you can go to topgunoptions.com/weekly-options. Weekly-options. If you're an old guy like me, you can type it, or you can simply go to the Top Gun Options homepage, hover over services, and go to the pull down that says weekly options right here, and you can sign up for a 2-week test flight to see how we're doing in our weekly option service. Okay, got to run, got to trade. Happy hunting. Make sure you hedge, and I'll be back with tomorrow's sit rep. We'll see you.